Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host at Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Nitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. So it looks like I need to deal with some fake news. There's this low quality, misrepresenting, and lying writer at CoinTelegraph, which anybody who's been around the space knows that the quality of CoinTelegraph is definitely fake news. Anyways, he decided to say that I'm predicting like $27,000 Bitcoin in 4 months, and it got like 140,000 views. First, I'm not predicting $27,000 Bitcoin in 4 months. But, I understand he gets paid based on page views. He likes to lie and misrepresent and misappropriate people's likenesses and put words into their mouth about what they're saying. So anyways, just understand it's fake news. What are you talking about? But what he did pull about from was a tweet that I had put out. The tweet, the exact text says, quote, "A good month of BTC consolidation. 200-day moving average rising well. Next 6 months should be very interesting and fun. Ledger X, exclamation mark, no 2X. Then a little rocket and a bull." And in this tweet, I had a picture that showed the 200-day moving averages. Now, I'll link to both the tweet and another video that where I did make a price prediction, and the price prediction came true. I'll link to that in the show notes, so you can go to bitcoin.kn and look at the tweet and see what it says and things like that. Anyways, the main gist of the tweet, it's looking at the 200-day moving average. Now, the reason I like the 200-day moving average is because it filters out all the daily noise. All the crazy ups and downs, people trying to pump or dump, whatever it is, it all gets filtered out in the 200-day moving average, and you see the long-term trend, because that's, about 8 months worth of price data. And so in the tweet, I had the first bull run when it started at about 25 cents. January of 2011, it was the 200-day moving average was 15 cents. This was the first time I publicly, started talking about Bitcoin, recommending it. And so the relative price, or in other words, the current price divided by the 200-day moving average, was 1.67x. And that particular bull market, it ran to $32 a coin in June of 2011. And the 200-day moving average at the time of the height of that bull run was $2.50. And so $32 divided $2.50 is 12.8x the relative price. So you can see that there's a big difference between 1.7x and 12.8x the 200-day moving average price when we're looking at the relative price. And that kind of gave us our first real pricing data using this 200-day moving average methodology, because before that it was just widely a kind of an experiment. There wasn't much of a market, etc. Anyways, the price corrected. January of 2013, I did an interview with Future Money Trends, said, hey, look, it looks like we're going to have another bull market. The price at the time was $13. The 200-day moving average was $11.50. So it was 1.13x the relative price, this current price divided by 200-day moving average. And sure enough, April of 2013, it ran to $250. And the 200-day moving average had moved up to $32. So at the height of that bull market, it was 7.81x the 200-day moving average, the current price was. So 1.13 to 7.8. Then it got all the way down to like $65 in July of 2013, and I didn't quite think that the bull market run was quite done yet. I mean, we'd had some unusual events that kind of cut that bull market short. And usually the bull markets last a lot longer, no matter what market you're really in when you're looking at these turns in the 200-day moving average. Anyways, it got all the way down to 0.87x, the 200-day moving average, the relative price. And this had to do with the shutdown of Silk Road and other news. And then November, and one of my buddies, he's an investor in Kraken and other companies with me. He actually, when Silk Road got shut down, he was like, buy Bitcoins. He texted me like in all caps with 3 exclamation marks. And I was like, no kidding. It's a great deal right now. Because people, when the darknet markets, when they get seized and all these coins get seized by the marshals, that takes a lot of the transactional demand of Bitcoin that is being used for those purposes. It takes it off the market. And so those people have to go and reacquire their coins. And so they have to buy a bunch of Bitcoin. And they don't really care what the price is because they're just using it for transactional demand, the price elasticity. So, anytime you have a big supply shock, a decrease in supply of tradable Bitcoin, not cold storage Bitcoin that people are speculating with, then they'll pay whatever price. And boom, sure enough, November 2013, there were Senate hearings. The price ran to $11.50 a Bitcoin. The 200-day moving average was $150. And so the relative price was 7.67, the 200-day moving average. Okay, so, that's walking us through 6 years of price data from January 2011 to November of 2013. 1.7x to 12.8x. Corrects and consolidated down to 1.1x. The next bubble, well, no, I don't like bubble. The next bull run ran to 7.8x. And the reason I don't like bubble is because bubbles are unsustainable because you're using debt to fund it, whether it's margin debt with stock or whether it's margin debt on real estate or things like this. But Bitcoin's an equity-based asset only, and you have to deliver it in the blockchain. I mean, now we're getting margin trading out there more so, but it's still, it's equity-based. And if you're holding it in cold storage, you can't be margin called. Like with stocks, you can't get foreclosed on. Like with real estate, I mean, you hold it sovereign, monetary sovereignty, right? Like it's yours. I mean, the price can fluctuate, but nobody can force you to sell it. So that's why I distinguish between a bubble and just a bull market or a bear market. Anyways, 1.7x to 12.8x, 1.1x to 7.8x, 0.9x to 7.7x. And so as we're seeing more participants and more volume come in, the overshoot on the bull market to the upside, it only gets so much, it only gets to a certain height before it comes back to the gravity of that 200-day moving average. So 12.8x, but then it is 7.8x and 7.7x. So significant decrease in the overall height above that 200-day moving average that it got to. And then we had the correction and consolidation for, 2014, 2015 into the middle of 2016. And like I said, these 200-day moving averages, they move on a long time frame. So, your bull market's go on for a long time, your bear market's go on for a long time. And the bear markets, it's actually really good to have these bear markets because the coins move to really strong hands. I held through all these bear markets. I don't really ever sell Bitcoin. I only buy Bitcoin. Even all throughout these bear markets, buying Bitcoin because I like to buy stuff when it's cheap. And how do you figure out when something's cheap? Well, let's look at its price relative to the 200-day moving average, and that'll give us a good signal. If it's 1.7x, hey, that might be a buy signal, or 1.1x or 0.9x. Like, all three of the times, like I said, hey, look, I think Bitcoin's a good buy. We're going to have a big, we're going to have a bull market. This is part of how I'm making my thought process and my methodology. Anyways, it ran to 12.8x, 7.8x, 7.7x. And then I did an interview with Crush the Street, June 6th of 2016. And I put in the tweet, May 2016, Bitcoin's $450. The 200-day moving average is $400. So that's a 1.1x relative price, which is actually very similar to the January 2013 1.13x. They're actually exactly the same ratio of current price divided by relative price. And I said, Bitcoin could go to $3,000 in this bull market. This was May of 2016. Well, here we are, October of 2017, and Bitcoin's at $5,700. So I was right again. This is the fourth bull market in a row that I've called in advance, and been right. And that's not even counting the Bcash and the GBytes and the Stellars and the Bitcores and like all these other things that, you could have made some money with. So where are we at? Well, in the tweet, I had August of 2017. We were at $4,600. The 200-day moving average is at $2,700. And so that gives us a relative price of 1.7x. Well, that's actually kind of cheap, relative to the 200-day moving average. 1.1x is, undervalued. 1.7x might be kind of just fairly valued, or even a little bit on the cheap side of fairly valued. Because if you look at the standard deviations and draw bands, we're not outside the second standard deviation, let alone the third, where you would get undervalued or overvalued, like very undervalued or very overvalued. So this current price that we've got, of $5,700 divided by a 200-day moving average of 29.2951 is just kind of par for the course. I mean, we're not heavily overvalued. We're not heavily undervalued. It's just a nice average kind of price for Bitcoin. And so, but what would it look like if we did get very frothy? Like what would the Bitcoin price look like if we got frothy, right? And so, well, how about 7.8x and 7.7x? Those were the previous two bull markets, 2013. And a lot more people were participating, a lot more capital. And what did that look like relative to the previous frothiness of 12.8x? Well, 7.8x divided by 12.8x is about 4.75x. And so February, we're adding about $20 a day to the 200-day moving average. So from October to February, we're looking at the 200-day moving average moving up to $5,767. Okay, so if we take that $5,767 multiplied by the relative price of 4.7x, that would give us the $27,000 price tag, right? And so, that's just looking at our previous bull markets, our previous bear markets, the previous ratios between where they reached in terms of their current price divided by the 200-day moving average, how those have actually declined a little bit in time based on the amount of volume that has come in, because we're now trading $3 to $4 billion a day of total volume in the crypto markets, $1 to $2 billion a day just in Bitcoin. That's a lot different than June of 2011 when, we're trading a couple $1 million a day, right? And way different from January of 2011 when I issued the buy price. I mean, there were days where like the entire global volume was like $500 on Bitcoin. I mean, like back when I publicly recommended it, I mean, some of those days, $500, and and now that's like $10 million, but whatever. It's really kind of crazy. Think of this wealth transfer that's happened. It's unbelievable. And it's only going to keep happening, but Bitcoin will go through cycles in this worldwide adoption of these 7 network effects of all this stuff. And so, but that's kind of the case for $27,000 Bitcoin, both the case for and the case against. Now, I don't really think that we're going to see $27,000 Bitcoin in February. But hey, I've been surprised all the time with Bitcoin. And I've been surprised at the upside. I mean, in the Crush the Street interview, I said we might see $3,000 Bitcoin. I mean, Bitcoin was trading around $500-$600. Who does that? Who goes out on a limb and says we're going to see it go up 500% in a year, right? In this bull market. And yet, boom, here we are. We've gone up more than that, almost twice that. We've gone up almost 15x since I made that call. And the bull market seems to be as healthy as ever. It's just humming along. We have corrections here and there, like Goldman Sachs talked about it, corrected 1800, it shakes out all these weak hands, churns the markets quite a bit. The Bitcoins get into some more solid hands. That's all great, There's some other people that have, I guess, made price predictions, but I mean, if it's anything like this fake news of this David Dinkins clown, like at CoinTelegraph, which is a total clown car show of Bitcoin journalism, I don't know how much stock to put in any of these price predictions, but we have some, pretty significant people like Roni Moez saying $7,500 Bitcoin in the next 5 months, 15 to 20,000 by 2020. We have Tom Lee putting out 6,000 by mid-2018, 25,000 by 2022. Tom Lee is a big top strategist on Wall Street. We got Max Kaiser, $10,000 Bitcoin in the short term. Mike Novogratz, $10,000 by April to August. Now, Novogratz is interesting. He's former Fortress hedge fund manager who actually recognized about $250 million recognized gain on Ether and bought like a G550 or whatever, talking about it on Bloomberg. Tone Vase, 100,000 by the end of 2018. Tone's always gone on the one of the two ends of price predictions, whether it's Bcash failing or whatever. Master Luck, that he's a really interesting character. He's been right on a lot of these calls. He's he's predicting like 15,000 and 40 to 110,000 by 2019. And then, of course, John McAfee, who's making a personal bet on $500,000 Bitcoin by 2020. And then Jeremy Liu of Lightspeed, Snapchat's first investor, a big Facebook investor, he's put out publicly $500,000 by 2013. And so, there's definitely some really big upside. And I saw another big Wall Street hedge fund manager come out and put out $1 million Bitcoin price target. And he thinks there's a 75% chance it'll hit $500,000. So, there's definitely a case for $27,000 Bitcoin. I made the case for $27,000 Bitcoin in the tweet, at least laying out some of the numbers. But don't misinterpret that the way that David Dinkins did and intentionally misrepresented it in order to get page views, that I'm actually predicting that that's where the price is going to go. Because, for the most part, I don't really like to stake myself on a prediction, because when I do, I'm right. 25 cents to $32, $13 to $250, $75 to $1,150, $500-ish to where we're currently at. I called all of these in advance publicly, so I take it very serious, when I make any type of a price prediction and kind of say, this is where we're going. I try to be pretty serious about that because, I'm right whenever I do that. So anyways, not making the case there, but I mean, even if we were to go, think about if we were to go to say 6x, the 200-day moving average, and the bull market has total long into like June or July of next year. Whew. It could be some serious Bitcoin price, like even six figures. So anyways, on the downside, I really don't see a huge amount of downside on the Bitcoin price. Let's say that we were to go to 90, let's say it absolutely crashed and stayed there, and we went to 90% of the 200-day moving average. You're looking at like $2,700 Bitcoin based on the price there. Say a total long for a while, you're looking at like $2,000 Bitcoin. So there's not a ton of downside, maybe $3,000 per coin. And upside, you've got, $50,000, $80,000, $100,000 upside per coin on this bull market. Remember, you make money when you buy, not when you sell. That's why, I take it seriously making the calls, because, if you had bought when I make any of these calls, you'd make a lot of money, which a lot of people have done. And so, anyways, that's some of the case for Bitcoin and against Bitcoin going to $27,000 by February. I personally would like to just see a nice, consistent consolidation and plodding along where we don't get too much outside of either 1.5x the 200-day moving average on the downside or 2 to 2.25x the 200-day moving average on the upside. Let's just plod along there for another year or two with a nice, gradual, consistent uptrend. And that'll get Bitcoins into very, very solid hands. And we've got a lot of other things, a lot of other uncertainties to take into account. LedgerX, they're going to start trading options here pretty soon. No 2x should happen in next month. I'm actually going to be on vacation from November 10th to November 25th. No internet access. I was talking to a Forbes journalist. She was like, "No way, unbelievable, really?" And I was like, "Yeah, like my schedule's not going to be dictated by a clown car." So, anyways, this 2x is, I actually don't think it's that big a deal. I think the Bitcoin network's just going to chug along. There's several reasons for that. One is if you got anything between your two ears, you're running your own full node and you're holding your own private keys. So that means you're not going to get taken for a ride like they want to do with SPV wallets. They want to take SPV wallets for a ride. And these SPV wallets, they might follow the longest chain, and the longest chain for a little while might be the 2x one. Because let's look at Bcash. There's a big miner who's accumulated about 234,000 Bcashes since August 1st. Costs about $200 million at market value prices. It's currently worth about $80 million. So this miner believes in Bcash to such a degree that he's already got an unrecognized loss of $120 million. And, one of the rules is never enter a position you can't exit. So you've also got a couple Bcash miners that mine to a particular address. They have over 80,000 Bcashes in those addresses and haven't moved them. And their average cost, based on opportunity cost of just mining Bitcoin, it's about $550 per Bcash. So they're underwater $20 million. So these two big Bcash supporters, they're underwater over $150 million. I mean, I don't know how much they think they're going to continue burning, but hey, you want to throw money in the money hole and light it on fire? Like, I love the money fire because, my average sale price on these Bcashes is like 0.11x Bitcoin. And it's currently around 0.6x Bitcoin. So, I mean, if you turn around and measure it not in dollars, but measure in Bitcoin, you're still down over 50% if you've been in Bcash, right? Yeah, that's not cool. So, anyways, if 2x, let's say that the miners decide that they're going to mine this thing for a while, well, there are like 130,000 Bitcoin core nodes out there. And you don't just redeploy an upgrade to a network that size in a couple weeks without any press and without significant coordination and everything. I mean, it just doesn't happen. And so, there maybe are like 50 BTC1 nodes out there that Garzik has deployed. So in other words, nobody's running 2x. Nobody in the actual Bitcoin community. And so if miners decide that they're really going to mine this stuff because they have to, either they mine 2x and get it over the difficulty adjustment, or it just stalls and dies. Well, if they take that mining power for mining Bitcoin and mine 2x, the opportunity cost is like $7 million a day. So let's say that they split it between the two of them. And so that would mean that we have month-long difficulty adjustments and 20-minute blocks. They're going to have to mine a month $3.5 million a day opportunity cost. That's $100 million plus whatever they might be able to sell those 2x coins for, which the Bitfinex futures markets are showing are at 15% the Bitcoin price. And so that's great. They keep the chain alive. I pray that they keep this chain alive. I really do. Why? Because what's going to happen is large holders of Bitcoin are going to trade their Bitcoins trade their 2x for Bitcoin, just like they did with their Bcashes. And so what's that do? Well, that takes off just like I talked about with Silk Road, that takes off the tradable, saleable Bitcoin out there and puts it into very strong hands, into cold storage hands. It's effectively a 10 to 15% dividend after transaction fees, taxes, etc. So, I hope that they keep 2x alive, because for every $100 million of Bitcoin, that's an additional $10 to $15 million of extra position that you get to take as a Bitcoin holder, and you suck off the tradable Bitcoin out there, just huge amounts of it, and that puts more pressure on the price. So I think a lot of this bull market that we've seen with Bitcoin going up to 5,700, which I hadn't really accounted for back when I'd made the $3,000 price prediction, is that we've, because when I made that $3,000 prediction, SegWit still hadn't been even rolled out in the sense of being able to have activation periods or anything. The halvening hadn't happened. There were quite a bit of things. And so in that year and a half, we had Bcash rolled out and SegWit, and the way Bcash gets rolled out, people sell their Bcash and buy Bitcoins, and so it just squeezes that supply of tradable Bitcoin, and the price goes through the roof. And then the people who are trading their Bcashes for Bitcoins, they're just holding them and sitting on them. They're hodlers. So if we see the same thing with 2x, and we see a significant amount of people like this Chinese miner who's bought 234,000 Bcashes, I guess he thought it was a good idea at the time, and these miners that are just sitting on their Bcashes, if they do the same thing with 2x, that will be beautiful, because we could see another big ramp up in the Bitcoin price if that happens. And so anyways, like the advice I give always is, make sure you're running your own full nodes. That's Bitcoin Core, just so there's no misrepresentation or misunderstanding. Like, you better be running Bitcoin Core and not have your Bitcoins on an SPV wallet or on a custodial service like Coinbase or BitGo, because these guys, they want to play politics with your money. And you want to play politics, it's a game of kings, and you need to have your own money, not play it with somebody else's money. But they want to play it with your money, which means they might want to lose it, and that's a bad idea. So, get your coins off of any of these services into your own full node, your own private keys. I like Bitcoin Core. I like Armory. I like the Glacier protocol. For the actual hardware, I like Purism laptops. PURI.SM is the website. And, just declare your own monetary sovereignty, stake out that territory, and don't get taken for a ride by these clowns. And also, if you're holding your private keys, you can probably sell your 2x's faster than if you're holding them on some custodial service. Now, if you have them at Kraken, they'll do the coin splitting and everything for you, or Bitfinex. So, if you want to take the risk of holding them on the exchange, you can probably get them done instantly there, when the fork happens. But otherwise, you don't want to end up like these Zappo holders and watch the price of Bcash go from 0.2x of a Bitcoin to 0.05x. They have a 75% loss of what they otherwise could have gotten in terms of Bitcoin. And the Coinbase holders still haven't gotten access to their Bcash. And there's like 750,000 coins being held at Coinbase. So, the first rule of panic is do it first. Like, stake out your own monetary sovereignty, get your own technical competence so that you can trade your Bcashes or your 2x into Bitcoin, trade your whatever else you might get. Just if you're holding your own keys and have that technical competence, you have the optionality to make the decision. You're not beholden to one of these services. And yeah, otherwise it's, just keep hodling away. It's been a great strategy so far, and I think we have lots of upside. Ledger 2X, Ledger X options. We got No 2X coming out. We've got Wall Street. Then we've got ETFs that'll probably get approved, in a year, 2 years from now, as we have more regulated markets out there, more professional markets that the regulators of the ETF are comfortable with, because that's their main beef, like their main issue with the ETF is that thing. And so this bull market could actually go on for a significant amount of time longer, another year or two, maybe even longer. So, and if it's just going on in a very measured, slow, methodical, consolidating way, with ups and downs, but nevertheless just plodding along with that upward trending 200-day moving average, hey, it just means keep acquiring it on a regular basis, 200-day moving average, dollar cost averaging in, and that's kind of the way to play it. So anyways, there we go. I hope that clears up some of the fake news. I hope you found this particular podcast useful or helpful in explaining that tweet, because there's a lot of information packed into that tweet, like most of the stuff that I put out. You see the tip of the iceberg, but really there's so much thought and analysis under the surface that, you just can't put into tweet or whatever. And hence why I have the podcast. And, since this fake news clown, 140,000 page views, I'd really appreciate it if you share this particular interview around, just to, help repair some of the damage that this guy has caused to me, because he's been trying to, he just wants to get some page views. So he, just fake news and lying and misrepresenting my words. So anyways, it's been great. And like always, if you have any questions, head over to the website, record your voice, and I can hopefully get to those. Anyways, ciao for now.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.